You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern time once again for TWIFO, This Week in Futures Options, the program where we break it all down across all of the different asset classes, maybe metals or energy or rates or equities or ags. You never know what's going to make it onto the show. Crypto, you got to tune in every week to find out. My name is Mark Longo from the optionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Our content is out there on so many different platforms now. Whether it's on, you're listening on the big ones, you know, your Apples, your Googles, your Spotifys, or maybe some of the smaller platforms out there like your Podbeans or others. Make sure wherever you're listening to it, keep rating and reviewing. It really does help all the new folks who are discovering these markets for the first time these days. Helps them find a path to our content. Of course, keep those questions and comments coming too. We do love to hear from all of you guys and gals out there. And let's see who we're hearing from on the show today. I'm pleased to be joined once again from the mobile FTSE Russell, I should say the southern FTSE Russell studios, Mr. Sean Smith, the managing director of derivatives licensing over there at FTSE Russell. Mr. Smith, welcome back to the program. How goes your sojourn to the south, sir?
We're doing good here. Thanks for having me on the show, Mark. I'm looking forward to a great show. And I do have to say it's absolutely sunny and beautiful down here in the south.
Well, we'll have to make sure we get the show going before the thunderstorms swoop in and knock you off, right? Because you know that's coming.
It comes every once in a while, yeah.
If it's a day that ends in Y down there in the southern studios, chances are a storm's going to sweep on through. And also joining us a little bit closer to home, holding down the CME Group hot seat once again, one of our favorites, Mr. Dan GRAMZA, the president over there at GRAMZA Capital Management. He does a darn fine job, if I do say so myself, over there every day with his videos over there at dangramza.com. Check him out if you haven't already. Dan GRAMZA, GRAMZA.com. Great videos every day, breaking down pretty much every futures market you could ever want to talk about and more. Check him out. Mr. Dan, welcome back to the program, sir.
Well, thank you very much. It's great to be here with both of you and a lot to talk about. Very interesting markets as always. I'm excited about us having a chance to look at a few together.
All right. I'm excited too. But you know how we have to kick this thing off, Dan? It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, listeners, welcome to the Movers and Shakers. We break down everything that was moving to the upside, a.k.a. the light side, and to the downside, a.k.a. the dark side. At CME this week, you know they trade a lot of stuff over there, so that's a whole bunch of products. I have to admit, I'm a little surprised at how almost exactly even our chart is this week. It's split pretty much 50-50 to the upside and to the downside. I thought given some of the tumult we saw earlier this week, it might be a little bit heavier to the downside, but of course we have seen a retreat from some of that and back up to the upside this week. So another topsy-turvy week. Mr. Dan, where should we begin our journey this week? To the light side or to the dark side, sir?
Well, I would like to start to the dark side. I think there's some interesting things there that we can explore.
There are some definitely interesting things that have been, shall we say, pretty lofty for a while, finally taking a turn to the dark side and doing so aggressively. Let's start with number 5 to the dark side. You have to sell off over 5% to even be considered this week. Listen, that's how much sell-off there was this week to be found. That gets you all the way to soybean meal off nearly 5.2% this week. It was number 4 in the other direction last week, up 3.1%. So quite a turn out there for soybean meal. It is not the only ag to the dark side this week, though, listeners. Number 4 is wheat, off almost 7%, 6.88% this week. If you think, that's a lot of ags, we're not done. Number 3, corn, off 7.5, almost 7.6%. It was number 4 in the same direction last week, off 3.16%. So off over 10, closing in on 11% just in the past couple of weeks here for corn. But that's not enough, listen. That's not even enough to break into the top 2 to the dark side this week. Number 2, you could probably guess it. Yep, it's Bitcoin. Man, what a week. Just a few weeks ago in mid-April, it hit its high of 65,000, right around that level. And I do believe yesterday, the day before, it touched 30,000 before it bounced off it, listeners. Coming into today's show, it was fighting to get back to the 40,000 level, but still aggressively clipped since just a couple of weeks ago and aggressively clipped since our last show, off 13.76%. And the week before that, it was number 1 to the dark side, off 10%. So again, you add those two together, you're closing in on 25% just in a couple of weeks out here. But that isn't even enough to take the number 1 spot to the dark side. What could possibly trump Bitcoin to the dark side? You say, listeners, well, people have been saying it for a while. The hottest commodity on the planet, the hottest asset on the planet. Forget crypto. It's dead trees. Because it's lumber, once again, in the number 1 spot, this time in the other direction to the dark side, off 14 and almost 0.75%, closing in on 15%. So I guess, Sean, that's a short way around to saying maybe this is the week. Did you get another quote on the fence? How goes #FenceWatch, sir?
It's been good to hold out and wait for these prices to come back in. But I'm going to wait a little more. I think this market is going to breathe.
There's more to come.
I'm hoping anyway.
There's more to come in dead trees. So we're not quite there yet, listeners who are glued to #FenceWatch. Another week or two maybe before Sean can reliably put it in. But we'll keep you glued, keep you updated. The second that fence is being built, we will let you know. Let's move to the light side now A lot of movement to the light side. Let's go out to number 6, actually, because that's where we find the Russell 2000, up about 1.25% this week. It was number 7 in the other direction last week, off nearly 3%, 2.81%. So getting some of that back. Topsy-turvy week this week as well. We'll get to all that in a little bit. Number 5 on the actual light side this week is the Nikkei out there in the yen, up about 1.75%. Number 4, it's the NASDAQ 100, up about 2.4%. It was number 5 in the other direction last week, off a little over 3%. Number 3, it's silver, having a good year and having a good week too, up 2.5% exactly. Number 2, it's gold, taking the lead, the big brother, up 2.85%. And number 1 this week is the Eurodollars, up 7.94%. It was number 5 in the same direction last week, up 3%. So a lot of movement, of course, the Fed out there talking about perhaps putting an end to all of this free money they've been putting out there for a while. In terms of vol advancers and decliners, there's been some interesting stuff. Some of the more interesting coming on the Bitcoin side. The Bitcoin vol actually declining last week, about in the June contract, leading our declines pretty much off nearly 10%, right around 10%, which is kind of interesting because we did see Bitcoin vol get some life to it again. It's one of the interesting stories we've been talking about on our Crypto Rundown show for a while. Is, Bitcoin vol has kind of been in the triple digits for the better part of the past couple of years, except for the last few months when it's been languishing in the mid 70s, and it actually got down to the 60% range not too long ago. And the question was, could it stay there or would it pop? Yeah, it popped. But now it's coming off again this week. So maybe it's starting to act like the old precious metals vol again, where if it gets any bid, it's short-lived. And in terms of vol advancers, there wasn't a heck of a lot of vol advancing this week. The most aggressive vol advancing was all on the ag side, really. It was the short-dated new crop corn, which was up 1.3% this week. And then we have the short-dated new crop August soybeans up 0.8%, tied with the short-dated new crop July soybeans up about 0.8% as well. So not a lot of vol gainers, more vol losers this week. But that's a lot of table setting. Mr. Dan, since you're in our CME hot seat this week, I'll let you choose. Where should we begin our journey this week, sir?
Well, I like the idea of talking about the fence. That lumber issue or the dead trees issue. You know what you reminded me of, Mark? And I remember when I would phone in an order in the cattle pit, the fellow who was on the phone had very distinctive voice. And he always knew my voice, too, which always amazes me when guys could do that. But he would say, you bought them at 44.15. You bought 10 dead ones. He called them dead ones. It was his way of referring to the markets. But anyways, let's go back to lumber. Lumber really is a unique market. Our issues now started in 2015. There was a beetle that caused tremendous damage to our forest. And if you look at lumber that's behind this contract, we get our pine, spruce, and something else. What's the other one? There's 3 that we basically get from the northwest of the United States, southwest of Canada, northeast of the United States, and southeast of Canada. That's really where the bulk of our lumber comes from. So we had some issues that started with that in terms of damage. And we've also had some issues in terms of, unfortunately, huge storms have come through, tremendous amount of damage. So the rebuilding effort also put some demand out there when it comes to lumber, which I find, kind of an interesting aspect to where we are. I know a developer who's had 3 new houses that he was supposed to be building this year, they've all been deferred. The average house in the United States has gone up $36,000 in terms of new construction, based on this increase in cost. So it has been significant. What he was saying, when he'd go to the supply yard to buy a few 2x4s that would cost him $10 for a handful, now cost near $100. So it has been exponential, and it has cooled off, as you have mentioned, which I think makes sense. And so right now, for this to go sideways or even cool off a little bit wouldn't be too surprising. But you know what else is interesting? Permits are up. Even though we're seeing some housing starts slowing down because of this increase in cost, permits are up. So what does that tell us? It tells us something about how people feel, which is powerful. One, they're willing to spend money and they're willing to commit to it by getting a permit. And so, and three, that says something about the future demand for lumber. It's not going away. We know that's still sitting there as we see those permits going up. So it's an interesting market. And I think right now, unchanged to lower is where we may be here for a while.
It is a fascinating market. Outside of Sean's fence watch, we have been watching the options volume in lumber for some time, waiting for some sign that they're going to start ticking up. I mean, if anything is going to drive some action in lumber, this obscene, absurd, just crazy market we've seen out there for weeks, if not months out there now, should really drive some paper. And it is starting to tick up, listeners. You'll be happy to know. They did a whopping 187 contracts out there. By the way, you guys, as always, can follow along, cmegroup.com/TWIFO or /TWIO. Both of them will get you to our reports. Go down to the drop down. Go down into ags, go to the softs. You'll only find one contract in there, and that's lumber. And that's where we are right now, with a whopping 187 contracts out there. So not a lot to parse, but it's more. It's more than it has been. So that's good to see that it is growing. I guess some folks finally, maybe like people like Sean, they want to hedge those fence costs. They got to get out there in the lumber options. We're at about a 1390 right now, listeners, in lumber. That contract with 8 days to go. The 14.5 calls did the most action this week, a whopping 23. If you're wondering what the vol is out here in lumber, let's go out to July. That's a little bit longer term. It's got 41 days to go. The vol out here is a 57. Now you can say that's high, but again, this thing's been moving like crazy. So you can maybe argue that it's almost too low. It's off about 2 points. So that's more volatile than most of your average equities out there as well, certainly, and even more volatile than a lot of the commodities we're going to talk about later on in the show. So clearly some juice, even though it's off about 2 1/3 points. The action, the calls last week weren't as bid as you might think. Of course, we're parsing only a couple of hundred contracts, if that. So read into this with a bit of a grain of salt. But the calls last week were 2.8% rich. This week, they're 7.3% cheap. The puts last week, 3.3% rich. This week, 18.1% rich. So the puts getting bid up out here in all things lumber. And since we're hanging out in the ags anyway, let's keep on rolling because there's a lot of other ags lighting up our dark side, including corn and wheat. So let's dive officially into the ags.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, let's dive into the ags because they're lighting it up to the dark side this week. They were dominating the upside for quite a while out there, but this week, a little bit of a rough couple of weeks out here for the ags. Since we have corn on the highest rank there on the dark side, off about 7.6%. We'll start in corn, even though net on this week coming in from Monday. If you look at the This Week in Reports, listeners, of course, it's going to start you from Monday because it's this weekend. When we go back to our movers and shakers, we go all the way back to our last show because obviously there was the rest of the session on Thursday and all of Friday, so you don't want to lose that in our analysis. But the This Week in Reports, when you're dialing on them, they're going to start from the beginning of this week. And from the beginning of this week, corn is actually up about 3%. So it looks like some of that sell-off came towards the latter portion of last week. We're at about a 663.25 right there in the corn. If you're wondering right now, looks like 37% of the paper. And how much paper did it do this week? A little bit more than lumber. 623,000 contracts on the tape right now in corn. So pretty active. And of that, 37% going up in the Dees contract. That contract's at a 551. So a little bit lower out there on the Dees contract. Let's go out to Dees where the vol is. The vol is about a 35.13, off about 1 3/4 points from last week, but still decently volatile, but almost half of the vol of what we're seeing out there in products like lumber, right? Shows you how high a nearly 60 vol is. That's a pretty active contract. In terms of skew out here in the Dees corn, it was 5.3% cheap to the puts last week. This week, 7.1% cheap. So puts getting a little cheaper. The calls last week were where the action was. They were nearly 12% bid. This week, only 3.9%. So the calls coming in pretty aggressively. There was a hefty bid to those Dees calls last week. And in terms of the action this week, the most active contract was the Dees 600s, which are out of the money calls on the Dees contract. Again, we're at a 551 on that Dees future out there. So the 600 calls trading 32,000, almost 500 contracts this week. The big day yesterday, 15, almost 16,000 going up ever so slightly closing. So it looks like a lot of back and forth going up yesterday. About 8,000 going up on Monday, also closing, and about 5,300 today. So maybe that's some of the reason why that call wing has come in aggressively. Some folks dumping those 600s and closing them out maybe a little bit. That's the most active, followed by about 22, almost 23,000 of the 6 halves. Those also traded pretty actively. The big day for them, actually, though, was Tuesday, about 12,200, most of that closing. And then yesterday, 9,000 with about 3,000 of that closing. So closing activity on the 600 and 6 halves in the Dees corn contract this week, undoubtedly why that call skew has come in so aggressively this week, listeners, down 8 points from our show last week. Let's look around really quickly, see if we see any other funky paper out here. It looks like it's mostly on a lot of that upside call. We do see some 700s trading. These are in July for less paper, about 15,000. So if 600 and 650 aren't bullish and optimistic enough, some 700s going up this week as well. Dan, I know you watch every product category out there, including the ags. Anything lighting up your tape this week in corn and or wheat as they take a bit of a break this week, sir?
Well, I have to tell you, I think that I'm long-term bullish on these markets. I still feel that the global demand for these products is very high, especially from China. And right now we're looking at what happens in South America. You know, the United States, Brazil, and Argentina are the resources, 3 major producers for corn and beans, for example. So the world's closely watching that. When China goes to buy these products, they do the same thing you and I do when we go to the store. We compare prices and say, which one do I want? Well, they're doing the same thing, only it happens to be countries. And they look at the currency and where is that right now? And what does the yield look like? And what is the quality of that product? But I still think there's room back to the upside. And I think in Dees corn, you mentioned that. I think it's a market that we should see some follow through. From my point of view, and again, I'm not suggesting anyone would do this, but from my point of view, if you and I were long the at the money, if we were looking at the 550 or maybe slightly out, 560 call, the way I would treat it is that technically this market's setting up for some movement. Well, then I'd want to see it closing above 570, 580 within 5 days. If it doesn't, I give it the big adios. I want my delta near 100 or close to 100, and I want to get paid for the trade. This technical setup to me is one that you get paid or you don't. And if you don't within 5 days, like I say, I'd give it the big adios and reevaluate. Otherwise, you shift, if I could say it, from a strategy to a hope trade. And I think when I look at the markets technically, I'm looking for very specific price action, but also within a certain amount of time. So the corn market right now, I think it still has potential to the upside if it starts to move within the next 5 days.
I like that. The big adios. Is that a technical term for you, Dan?
It is. I don't know how that started, but it's just how I think. But,
you need to get that for your website. It's thebigadios.com taken. You should grab that during the show here. That would be a great URL. I would love to send people to the Big Adios. I may have to borrow that.
I never really thought about it. Just anyway.
See, that's why you come on these shows, Dan, for the free branding advice. It's all gold here. It's all gold here on the shows. Let's check out what's going on out here. Since we're hanging out in the ags, let's look a quick check at wheat too, because wheat is right behind corn on our movers and shakers to the dark side, off nearly 7%, 6.88%. And all the ag heads out there, they love it and they want more all the time. So we'll give you some more today, including wheat. By the way, wheat active, but not as active as corn. Corn, we had north of 600,000 contracts. Wheat just a tick below 100,000 right now. So obviously less active than corn, but still a pretty active contract out there. That front contract in the wheat at a 676 right now, off almost 4.5%. Just this week alone. So unlike the corn where we saw, looks like the sell-off was dominated by last week, the sell-off continued here this week in the wheat. In terms of where the action was, 47%. So almost half of this 100,000 contracts coming in the contract that has the day to go. So getting back out to the short dated crops a little bit again. So kind of hard to parse the skew. Let's go out a little bit farther out. Let's go to the July contract. They did 36% of the paper there. That has about 36 days to go as well. So that's a little bit easier to parse. That future at about a 676, like we said. The vol out there, if you're wondering, about a 35.5 in the July wheat. That's down almost 3 points, 2.85 points from last week. Let's look at the skew. Last week, as you might imagine, the calls were all the rage. They were 11.1% rich. This week, they've come in a bit, about 5.4%. Maybe not surprising given that we've seen some of that upside lust start to fade out there in these ags. The puts last week, 5.5% rich. This week, 4.8% rich. So not a lot of change in the puts. And in terms of the most active contract, it was the 680 puts going out tomorrow in the June contract. They did about 5,000 contracts. That's the most active one, about 2,000 on Wednesday, and the rest kind of scattered throughout the week. Looks like back and forth on these puts, so no crazy bias, slightly closing on yesterday's paper. They're also trading a little bit actively today. In terms of out to July, where we were looking, the most active contract was the 730 calls that did about 3,000 contracts. Looks like most of that slightly biased towards opening out there, but ever so slightly. It's like back and forth on that 730 strike as well. So no clear bias really in either direction in any of this paper. And again, not a ton of paper, but barely 100,000 contracts. Dan, I know you're talking about the Chinese demand. Do you watch the wheat as much as the corn, or are you mostly focused on corn in the ags?
No, corn, beans, and wheat, I think all have their own unique characteristics, Mark. And I think the wheat market, to me, looks like it's trying to slow down a bit. And that's what we're seeing. The rhythm is the right kind of rhythm. And what I mean by that, if you look at yesterday's action, we had about a 20-cent move or so. And what we're looking for today is for a smaller range. In other words, about a 10-cent range. And that's basically about where we are. I think that makes sense in terms of that kind of aspect. The other issue is, are we slowing down because we're going to start finding buyers? So this market, started up here. If we look at the July contract, above 760, and now we're down here at 676. So we've seen a fairly good sized drop. The question, I think, since we're going in on Friday, do people want to go home short? And are we going to see a changing character on Friday as people maybe take off some of those short positions? And maybe some of the attitude we're seeing in the calls is reflective of that type of behavior. Some people may see it, get me out and I'll get back in on Monday. Or has wheat gotten so cheap that it's now attractive to buyers? The way I don't know the answer, but the way I would look at this, if I was a buyer of a call, let's just say, at the 690 level, slightly at the money, if we were looking at something like that, then we want to see follow through next week. If Monday we go sideways or lower, it means that sellers are still in control. If, on the other hand, we get a close above 690, then the next 3 days are going to be critical. We'd want to see this market closing above 720 by the close of next Thursday. So if we saw that, it would imply transition. The options may be a way for us to position ourselves for that. Right now, the trend is down, and at the current levels, nothing telling us to be a buyer, but I think we should be cautious on the short side and possibly looking for a buying opportunity in this market.
Dan, I do have some bad news for you. While you were speaking, I checked. I was going to surprise you by getting you the bigadios.com. Unfortunately, it is taken, sir. It is not available by, looks like, a publisher of crime fiction. So there you go. You have some competition for the trademark of the Big Adios. As we keep on rolling into our next segment, it is time to break down some equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. Let's talk some equities. You guys know where to go to find it. Go back to that cmegroup.com/TWIFO drop down. Go back out to the equities section. pretty easy to find equity indexes. Then go into the U.S. index where you will find the Russell 2000. I like to hit select all, but then again, it's up to you what you like to parse out there, listeners. And a lot of parsing to be done in the world of equities and indeed in the world of volatility. What a topsy-turvy week we had, listeners, as things were moving all over the place. We're selling off, we're rallying. Sometimes we're seeing that in the middle of the day. Vol is spiking, vol is selling off. We're kind of in the latter portion of that right now, as most of the major indices are feeling their oats yet again. They're rallying, the vol coming off quite aggressively. Let's start in RVX land, the VIX of the small caps out there at about a 23, pretty much exactly, puts it down almost 10 points. Remember, we were north of 30 last show, about 967 from last show, even though it was trading almost 26 earlier today. So still has some juice left in it, but a lot of that juice getting wrung out. That's 23 is the lowest we've seen in a while. A VIX coming into showtime was about 20 3/4 or so, puts it down about 4 points from our last show. Got as high as, I believe, about 25 and change earlier this week. So we saw a lot of juice out there in just the vol landscape over the course of the past couple of sessions. Forget about the past week. And then, of course, we have VVIX. Yeah, VIX topped out at about, it's like 25.13 earlier this week. So a wee bit shy of that. VVIX at about a 127 coming into today's show. It's up about 1 3/4 points from where it was this time last week. That hit a high throughout the week of about 138. So that got pretty frothy as well, particularly as we were selling off pretty aggressively yesterday. And VXX, well, let's move on from VXX to Vol Q. Let's go to Vol Q, aka the at the money vol of the NASDAQ 100, aka the newest tradable vol product over there at CME land. Guess where it is again, listeners? Right back to 22. It seems to just love to be glued to 22. I take it back. It's 22.01 right now. That's back down about 4.5 points from where it was. It hit a high of 25.65 during the week. So it did move away from the 22 strike ever so briefly, but now it's right. It's like there's a magnet on that 22 strike, and the equity vol and the NASDAQ vol just can't get away from it. It just keeps going back, glued to that 22 strike. That puts that VIX to RVX spread, so the small cap to large cap vol spread, a little over 2 points, about 2.25 points. And guess what, listeners? All that movement we've seen in RVX has just annihilated that spread. That spread is usually much wider, like 8 points and change. This week, 2.25. That makes that spread, about almost 5 3/4 points tighter. So small cap vol taking it on the chin this week, I think is the technical term. And the VIX to vol Q spread about 1.2. That's about 1/3 of a point. That one doesn't move as much because we see VIX moving, but we tend to see vol Q tending to hang out around that 22 level. So wherever VIX is, that's where that spread is. But that's an annihilation of small cap. So we got to start with Mr. Sean. Sean, a lot going on in the world of small cap, in particular that vol, that spread coming in like crazy this week. So what's been lighting up your tape out there in small caps this week, sir?
You know, it's really interesting to see such a drop in volatility with the index being so volatile this past week. But you know, it's one of those signs today. The Russell 2000 is rallying quite a bit. So there's been this intraday volatility has just been all over the place, as you've mentioned. So it's just been a real incredible opportunity for derivatives traders to take advantage of those big vol moves and actually being able to take advantage of them during the trading day. It's really interesting to see because vols usually don't intraday move so much. So I'm just really it's just a really should I say move in different directions is the point I'm trying to make there. And I'll let Dan talk more about those types of moves. But really interesting to say. But, lots going on in the world of Russell. As, you all know that May 7th was rank day. We have some big milestone days coming up every Friday, the month of June, with additions and deletions to the Russell 2000. And with the index moving around, those stocks coming in and out are really looking interesting, or will be looking really interesting as we see these levels throughout the month of June. And of course, we have the big recon day, June 25th, the last Friday in June. So lots going on. There's a lot of webinars coming up in regards to recon, both SIBO, June 4th, we're having one. SIBO's having one on June 9th, and there's going to be one later in June as well. But I'll fill you guys in on all of that as we get closer to those webinar dates. But interesting trade. One of the best things that I always love to mention is the liquidity you can find with our partner exchanges in regards to these products. The mini Russell over at SIBO Global is trading fantastically with good tight markets with their market makers providing tremendous liquidity, and the order flow from the clients. Clients are having a fantastic experience. CME Group, their volumes have just exploded. They're 200,000 average daily volume contract days. The micro is exploding in volume as well. Open interest is tremendously strong. The product's being used as an investment vehicle as well. So it's just been fantastic.
That number sounded kind of low to me, Sean, when I said 23, so I went and checked it while you were talking. It looks like they got a stale quote on that one because I checked it again right now. It's at about a 28. That makes more sense to me because 23 seemed very low. So that puts that spread much wider then. That puts that spread at about 7.25 points. So you're off about 5 points, 7.25. So that makes more sense. It's still come in, but that 23 just seemed way too low. So obviously,
way too low.
Old data point there.
Yeah, we were at 32 last week's show, I think, and we were always talking about the number hovering around a 30 vol as of late. So when I saw that number 23 today, I was like, I had to take a double look at the numbers myself and was really shocked by that. So thanks for mentioning that to the audience.
Your intuition proved correct, sir. Once I saw that, and I said, that doesn't sound right. It didn't ring true to either of us. All right, let's move on. Mr. Dan, sir, what's ringing true to you out there in the lands of equity and volatility this week?
Well, I like it. I like the action that we're seeing. I like the structure that we're seeing. The Russell, let's start with that guy there. That one really does surprise me because one of the things we want to be sensitive to is the Russell does have a tendency, and we've seen it in the past, lead the other indices. And it's because those mid to small cap companies can be a little more agile in terms of movement. One thing we want to remember with these other indices, like if you look at the S&P 500, 45% of the revenue for that index comes from outside our country. And so there's tremendous influence in terms of international as well as domestic impact on that indice. And the Russell, it's a little bit less so because it's more of a smaller mid-cap company focus. Not that they can have international income, but it's not as large a piece of it. Plus, the last 2 days, we've been, from my point of view, what I say buying the break. In other words, we've come off last couple days. But if you go back just 4 days ago, we had a nice big push to the upside in the Russell. All the action that we've seen in the last 4 days have been inside the range of that one large move, that green candle. And so what it says to me is the bias is still to the upside. I'm looking for an up move in that market. This is another example. If we have a setup like this, and if we were going to buy a call, just something very simple, at 22.30 or something in that range, we would look for follow through in the next 2 to 5 days, or we're back to that big adios exit. But the reason for that is structurally, I think we have a positive trade setting up. The other aspect, we look at the other indices, do people want to go home short? I don't think so. We're seeing buyers coming in across the board in the indices, and I do look for follow through to the upside. One more thing when it comes to the indices that I find, kind of interesting, and that's just the evolution that we've seen with these indices. If you look at the S&P, it's got an interesting characteristic in terms of how it's evolved. The concentration in that index has changed over time. If you look at, it's more concentrated, let's say it that way. In the last 50 years, the 5 largest companies in the S&P, we always talk about NASDAQ, but the 5 largest companies in the S&P represent over 20% of that index. It's market total value. So there is some impact with just a few of those entities, few of those names that are in that index. But I'm bullish. I'm looking for movement to the upside. I'm looking for confidence as we go into the weekend. Just one more thought, and that is, I think if we finish tomorrow like we're seeing today, I don't look for a huge move, but I look for a positive move. If we get that kind of movement, the big deal, it's going to be the Sunday night open, which is 5 o'clock Chicago time. It's when these futures markets open up at the CME group. And that will set the tone, because tomorrow, when we close on Friday, Asia has not had a chance to react to what we're seeing here. And so from my point of view, you want to see them begin with confidence. Asia has a tendency to put their low in on Sunday night when we see a strong close on Friday in these indices. So I think you and I should keep a close eye on that opening Sunday night, which is Asia's Monday morning open.
Yes, I'm keeping a close eye on all these quotes here as well. It seems like SIBO, Sean, disseminating a stale quote for RVX. That's the problem. Their site looks like it hasn't updated in over a month out there. That's what's gumming up the works out here. But we found a workaround to get you folks the latest out there in all things small cap. I know, Sean, this has been catching your eye as well. What else is catching your eye, and what else is lighting up your tape out there in the world of equities and indeed volatility, Mr. Sean?
I will. I'll reach out to SIBO and find out what's going on with their data there in terms of the updates that need to happen. So I'll be on that after our show today. But I just wanted to jump on the back of the Big Adios man, Dan's comments about the Russell 2000 and its makeup, with the S&P being 45% international. The Russell 2000 are those much smaller domestic U.S. stocks, as you mentioned, but they do have an exposure to the international markets. But I would say the majority of that is because they supply parts and equipment and services to those larger international companies. So they're more on that side of the international exposure, not so much their companies. But when the U.S. economy turns around and there's a real drop in unemployment and there's major job gains, this is where you see the Russell outperform to the upside. So when you see those really good U.S. economic numbers, that's where it's good to have your Russell seatbelt on. But when they turn, Russell outperforms to the downside, as we always say. I don't know about the Big Adios when it comes to Russell, but I think wearing a seatbelt is always good, because you're right, Dan. The volatility does stay over the large cap index because of the components and within the various different sectors that drive the small cap index, the Russell 2000. So I just wanted to jump on Dan's fantastic comments there.
I think we all need to pitch in and get Dan the Big Adios. I got like $12 in my pocket and some change. I think that's enough to buy him the Big Adios, Sean. We all pitch in, we put like $25 together. I think that guy will take it for that URL. It's worthy. Dan will put it to good use.
Well, Sean, I think those are excellent points. Because you're right, there is exposure there. When it comes to that, for me though, I think the next few days are going to be important, because we are seeing evidence of buyers coming in this market. The issue for us is the follow through. So if they're here, it goes back to the idea of getting paid for the trade. From whether I'm doing futures or options, I put time parameters around it because I don't want to overstay my welcome. And if you look, and I'm looking at things from a price point of view, but if you look at a trade, if anybody looks at a market technically, think about when you look at a trade and you say, that was a good trade. All right. Now look at your buy or sell signal. When did you get paid for that trade? High probabilities you got paid within the next 2 to 5 periods of time, whether it's intraday or daily or weekly. So that's why I think that's an important parameter. And right now, I think the setup we have is bullish. Let's just see if it can, catch up as we go into this weekend. That's what I'm looking for in that market. It's a very interesting index. It's truly unique compared to its sisters that we have out here, the NASDAQ and the S&P and the Dow.
I know what you folks are looking at when it comes to all things small cap. You're obsessed with the small delta calls. So let's see if that obsession is carrying over to this week, listeners. You know where to go. Go to the drop down, go to equities, pull it over to the Russell 2000. You'll see decently active week out here. We're at about a 2196 coming into showtime. So since the start of this week, a little bit shy of the 22 handle, off about 26, almost 27 handles, about 1.2% from the start of this week. And you know what? It's not the small delta calls anymore. It's actually looks like the smaller delta puts are back in vogue out here, which again, given what we've seen out here in the index of late, kind of hard to argue with. I know 24 half calls were pretty popular for a while there. Now it looks like the 20 half puts are leading the dance out here this week, listeners. That seems to be the most active contract on our tape here by a country mile. These are going up out here in June, so a little bit longer term, this time about a month or so to go. So not quite all the hot weekly action, but so small delta puts as opposed to small delta calls leading the dance out here in Russell 2000 this week. Will that get it? Will that continue? Will that persist, listeners? I guess we'll find out as we keep on rolling into our next segment. Dan, we got time to squeeze in one more before we start squeezing in some of the listeners. So where should we hang our hat next, sir? What's lighting up your tape this week?
Well, let's take a quick look and see what is happening. And what I find interesting is what's going on in the currency markets. We're seeing some action there when it comes to the euro, the Swissy, Japanese yen. So I'm looking for the currencies to get stronger. So for a weaker U.S. dollar as we go into this weekend, gold, the bias is for a move to the upside. And from my point of view, I'm looking for kind of a sideways move as we go into the weekend. Silver also is setting up for a potential move to the upside, but the next 2 to 5 days, very important for silver. If buyers are here, we're closing above 29 even. That's for July contract by the end of next Thursday or so. We'd want to see that kind of movement. Gold, we'd want to be above 1900. But gold, these are excuse markets. They need a reason to do something. That's what drives them. So do we have high inflation? No, not really. Do we have a weaker dollar? Yes, we do. Do we have uncertainty in the marketplace? Yes, we do. So there are some components that could drive this market. I think they're more bullish than they are bearish in that regard. And I guess the last one quickly would be energy. Crude oil is doing exactly what crude oil should do, and that's get a little bit weaker. I like the action that we're seeing in that market. I look for a $5 to $10 range really for the rest of this year, unless our economies get turned on a little bit more. So it's a very interesting market from not only the U.S. point of view, but also internationally. We are seeing demand picking up. China's buying more and more of our crude. India is also. So we're seeing our exports now are bigger than our imports. It's the first time I think we've had that since 1949. So we're seeing some interesting things in that market. And gas, natural gas is one that I thought we'd get a move back above $3. We did for a bit, but it's also cooled off a bit. So I'm looking for a sideways move in that market as well.
Well, you hit on a hot one there, silver. We haven't done the metals on the show in a little bit, so let's squeeze in really quickly the latest hot, precious, and shiny thing. It is time to talk some metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, let's do it. Let's head on out to the metals. You guys know where to do this. Go into that drop down, go out into the metals. It says it pretty simply, and there's a bunch of different selections in there. Go to precious metals, go to silver. That's where you'll find us today. Good little run again this week, up 1 3/4% since the start of the week. We're at about a 27.85. So our good buddy on the option block, Mr. Uncle Mike, got a bit of a smile on his face. He's a long-term silver bull out there. Good run here for all things silver. Coming into showtime, we're seeing, looks like the July contract doing the lion's share of the paper, about 40% of the paper. By the way, how much paper is that? About 34, almost 35,000 contracts in silver. So a decently active product, but again, it's not even a corn, let alone a wheat out there. Less paper in silver than those products. But of that paper, about 40% going up in July. So that's where we're going to hang our hat this week. The vol in here, in case you're wondering, about a 27.75, up about half a point. So managing to stay frosty out there from a vol perspective, which it's moving. So kind of hard to argue with that in terms. Actually, I take that back. The vol is about a 32.38, up about 2.75 of a point. So that's even higher than the 28 level. So a little bit of extra juice out there this week. And again, hard to argue with that. In terms of the skew out here, let's get the puts. The puts last week, 3.2% cheap. This week, 4.6% cheap. So puts getting cheaper. Calls, 5.6% rich. This week, 6.7% rich. So the calls up about 1.1 points this week, which again, hard to argue. We're seeing more upside out there this week. And in terms of where the action was out here, the most active contract, we're closing in on the 30 handle. So I guess it makes sense that the 30 calls in July would be leading the dance out here with about 2,100 contracts. Doesn't sound like a lot, but when your total volume is about 34,000, that actually is a lot. And of that, Monday was the big day, 800 contracts, followed by about 550 on Tuesday, 500 on Wednesday, 300 today. Most of that opening earlier in the week. So some opening positioning here on the 30 strike. Probably the reason why those calls are not just maintaining their bid this week as we rally, but actually getting more bid out here. Once you go past the 30 calls, it tends to fall off a bit. The next most active contract out here looks like it is in the 29 calls. Also pretty active, about 1,000 contracts this week. So about half the paper of the 30s. And those also opening and to the upside. So again, opening paper on the 30s and 29s as we keep rallying. No doubt why that call wing is maintaining its bid and even getting more bid throughout this week. Dan, you just broke down silver. Is that the one metal you're really focusing on these days?
Actually, no. But first, I have to say, Mark, you did a wonderful job summarizing what the expectations are for silver.
Why, thank you, sir. That's why I'm trying to buy you the bigadios.com. You're such a nice guy.
Well, I'll tell you where that comes from. It's a mental way that I would think about the market. In other words, I don't think about being right or wrong. I just think about a business decision that's going to cooperate. And if it doesn't cooperate, I have a loss. No problem. I expect to have those. And the big adios is just a way to mentally disengage from that market because I have expectations. If the expectations aren't met, not a problem. Let's just give it the big adios and stand aside and reevaluate. And the reason is, so many times it's so easy to marry a losing position. And it's so difficult to not take profits quickly. Well, the big adios is just a way for us to disengage. We set up the strategy. We stick to the strategy. The outcome is a profit or loss. That's it. So that's kind of the evolution of that. I don't even realize I say it, actually, until you guys brought it up to me. But when it comes to silver, we are seeing, I think everything you gave us is a clue to the potential energy in that market. And the bias is to the buy side. But again, the timing of this, if we don't get a close above 29, even by the close of next Thursday, that implies a sideways move. It's not necessarily bearish. The other market that I thought would maintain some upward movement in the metals is copper. Copper is a fascinating market that we don't have a substitute for. China consumes 48% of global supply. United States is number 2. Germany's number 3. And we need copper to make stuff. And China needs copper to make stuff internally. They have more people living in the cities now than they do on the farm. So those people now want stuff, and they have to make stuff that we buy from them. So demand on copper is tremendously high. Supply is coming down. So longer term, I'm bullish on copper. I think it's a market that we should pay some attention to in the metals.
Yeah, you're right. People are certainly paying attention to copper. We didn't get a chance to get to it today, but they just announced a new record over there at CME for their copper options a little over a week ago on May 10th. They put up 25,010 copper options. That beat the previous high by a substantial margin. The previous high was 16,000 contracts set all the way back in the pre-pandemic days of November 2019. So clearly copper on the rampage as well. Not on our movers and shakers this week, so we didn't break it down, but we'll keep an eye on that one as more paper lighting it up out there in copper. Probably going to make it on our radar again pretty soon. But you know what's always on our radar? It's you guys. So let's get to your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options. Facebook.com/The Options Insider, StockTwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, let's get to it. We're kind of run up against it. I want to make sure we get to this question here, which is pretty timely. So I'm going to skip down to this one here from Eli. Eli says, hey, guys. Well, hello, Eli. He says, can you give us an update on the cross-asset correlation? Seems like a good time to break that down given the recent volatility out there. I agree with you, Eli. It is a good thing and a good time to break it down. I've had this on my radar to talk about for a while there on the show. If you guys are subscribed to the premium version over there at Bantix, you get the full suite of tools. You can check this out for yourselves. Unfortunately, it's not available over there, cmegroup.com/TWIFO. They got to hold back some stuff for the paying customers, right? And this is a pretty cool tool. I definitely encourage you, if you are using the premium version, you should be checking it out because it really does put the lie and kind of the answer to some of these questions people have about, what really is correlated these days and how are things moving? The old saw, when things hit the fan, does correlation go to 1? Well, let's find out. We ran 2 different scans right before the show. First, we did over the past week. So kind of keeping with our This Week In theme, let's see how the correlation has been over this crazy week. It's been a very topsy-turvy week. Let's see if there's any surprising positive or negative correlations. The most positive correlation we found, this is kind of weird, British pound to heating oil, 92% correlated. Not two you usually mention in the same sentence. So that one kind of stuck out to us. We also saw silver correlating very positively to crude oil, about 74%. And then we saw RBOB to silver even more, 84%. So energy to silver, pretty strong correlation. When they ask this question, they secretly really mean, how does Bitcoin stack up? So Bitcoin to the Russell 2000, 62% correlation over the past week, and to the NASDAQ even stronger, 71%. In the negative category, this kind of intrigued me, maybe worthy of further analysis. Everyone always talks about Bitcoin as that uncorrelated, or perhaps some people think negatively correlated asset. But if you want a good negative correlation, a good place to look, maybe class 3 milk. It's negatively correlated to everything out there. Copper to class 3 milk last week, negative 86% correlation. Class 3 milk to the 2-year, negative 70%. Class 3 milk to wheat, negative 55%. So a little bit of good negative correlation. Now, of course, that's just 1 week. So take that with a bit of a grain of salt, but a very volatile week. So it's important if you're going out there buying different assets to diversify yourself that you understand these numbers. Let's dial it back a little bit farther now. Let's go to the beginning of this year. So the beginning of this year till now. So year to date correlation, because anyone could argue this has been a pretty unprecedented year. Let's see how this correlation stacks up. And when you dial it back that far, listeners, it changes the game a bit. Most of these correlations are pretty much in the green, pretty firmly. So we're seeing a lot of these assets are mostly positively correlated. There's a little bit of negative correlation in there, but for the most part, we're seeing mild to modest to strong positive correlation kind of across the board, which again, if you're looking at some of these assets to hedge against some others, pay attention to that. Let's go to the strongest positive correlation we've seen over the course of this year to date. Not surprising, you're going to find that inside the same complex. So the strongest correlation was heating oil to WTI, 97%. similar contracts. So that makes a lot of sense. Followed by RBOB to heating oil at 91%. Again, intra-complex correlation, not that surprising. Let's break it up a little bit. Let's go, to the equities. We see something similar as well. S&P to the NASDAQ, 88%. Gold to silver, 76%. That bears watching. We know silver has outperformed gold of late. So that ratio and that percent of correlation is kind of interesting to watch. The Russell 2000 to the S&P, even though Russell 2000 has been on the tier this year, still about 75% correlated to the S&P 500. The 10-year to the 2-year, 65%. And the NASDAQ to the Russell 2000, 61%. So those are the strongest positive correlations we saw over the course of this entire year to date so far. Everyone also wants to know Bitcoin. So let's get to Bitcoin. Let's see. And so far year to date, guess what, Sean? The asset that had the strongest correlation to Bitcoin was actually the Russell 2000, 32%. I guess that's probably because both of them were on a rocket ship to the moon since the start of the year, this last couple of weeks notwithstanding. So 32% correlation. So if you're slinging Bitcoin and Russell 2000, pay attention to that. Followed by the closest second is copper to Bitcoin at a 30%. Then we got our old friend Class 3 milk, 28% correlation to Bitcoin. Maybe dairy is kind of a stealth, uncorrelated asset class or negatively correlated asset class that people should be looking at more. I know Class 3 milk from an options perspective has been taken off this past year, so maybe a good one to watch. 24% correlation Bitcoin to RBOB and 11% to the Euro FX out there. In terms of the strongest negative correlations we saw year to date, once again, it's Class 3 milk. Class 3 milk, negative 32% correlation to the 10-year. Class 3 milk and rates hate each other. Negative 31% correlation for the Class 3 milk and the 30-year, and 30% correlation negative, I should say, from the Class 3 milk to the 2-year. So there you go. A quick breakdown. You can run it for yourselves. Dan, any surprises there, or maybe anything you expected in these numbers for correlation for the past week and indeed for the past year, sir?
Well, I have to tell you, I love you going through those, Mark. And yeah, I'd say most of them are really kind of a mystery to me in terms of the relationship. But I think you're onto it when you see something that's moving in, when the tide rises, sometimes it lifts all the boats. Well, maybe that's some of the action like you were talking about as these markets are moving, that they gave us that kind of general movement for the markets itself. And it's not so much because of a fundamental correlation. It was more just because the prices were moving in the same direction. So I don't see the fundamentals behind some of those. And then the other issue, when I think about it from a trading point of view, can I lean against it? Are these correlations consistent? And that's what's so important about what you did, because you brought back the picture and looked at it longer term. And we see, some of those things do change when you take that big picture outlook. So I think from a trading point of view, are you and I looking for the next couple of days? Are we looking for the next 6 months? But I found it really interesting what you just did.
Yeah, I think we could do a whole show just on this, quite frankly. There's a lot of nuggets. I kind of just skimmed the surface here. If you have these tools available, listeners, you should be looking at them because there are some surprising positive and negative and indeed lack of correlations that you wouldn't expect. And people out there have always been preaching, you put on a bunch of different assets and you have great diversification and you're hedged against these moves. Not so much. When you look at these numbers, that's why I've been saying for a while, at the end of the day, the only true contractually guaranteed inverse or negative correlation out there to a lot of these asset classes is buying a put on these things. So keep that in mind as you're trying to put on a bevy of different asset classes to insulate you or your clients against all of these crazy and insane market shocks. All right, we can talk about correlation for hours, but that music means we're coming up against it here on the TWIFO program. You guys have more questions about this stuff? You probably do. Hit us up. You know where to find us at Options on most of the major social media platforms or wherever you listen to these shows, wherever you're rating and reviewing it. You can't ask questions there. That's a slower way to get to us, though. At Options or questions at theoptionsinsider.com also works pretty well. If you listen to live, you get bumped to the top of the list. But before we go, let's go back around the horn. Let's start with Mr. Sean while he's keeping an eye on lumber for #FenceWatch. Mr. Sean, if folks have questions about these correlations or these volatilities or all the movement going on in the Russell 2000, where should they go? What should they do, sir?
Hey, Mark, first of all, just thanks for having me on the show. And Dan, it is always a pleasure to be on the show with you. And I said it the last time and probably the last 3 times we've been on the show together, I could listen to you all day. The stuff you talk about is absolutely fantastic. It's like market informative and so relevant to today's markets. It's just fantastic to be on the show with you. And thank you for being with us today. I'm at FTSERussell.com is the website where you can get all the information in regards to our FTSE Russell indexes on a global basis. And you can reach me at Sean.Smith at LSEG.com. Just LSEG.com.
There you go. FTSERussell.com, the place to go for all this data. You folks are always asking about this kind of stuff. What's going on? What's driving this or that in the Russell 2000, the Russell 1000? FTSERussell.com, the place to go. Give them a follow on the old Twitters as well at FTSE Russell. And you know where to go to find Dan. It's the BigAdios.com. I wish. No, it's Dan GRAMZA, GRAMZA.com. At least until I can score him that sweet URL. But Mr. Dan, if folks head over to DanGRAMZA.com, what are they going to find, sir?
Well, they're going to find a free video that looks at 22 different markets, stock indexes, currencies, interest rate, metals, energy, and agricultural markets. The idea behind that is if you've never looked at futures, it's one way to get a feel for how they're unfolding. So you hear my comments on what I'm seeing. You'll see red and green lines, which represent bullish or buy or sell levels. I'm not suggesting that anyone follows those, but I'm trying to show how I would look at managing or identifying trades in those markets. And it lasts about 2 to 3 minutes. And if you've only traded stock indexes, maybe there are some other markets you might find interesting. And that's one of the reasons why we look at so much. Plus, you know, the capital moves between all these sectors as you guide us through this, Mark. That's what we're seeing. We're seeing capital coming out of interest rates and going into stock indices, for example. So that's the intent behind it. And if somebody wants to send me an email, probably the easiest way to do it is at DMGRAMZ, like in zebra A, at att.net.
Wow, you do 21 markets in 2 to 3 minutes? You must talk faster than I do, Dan.
22. No, on that one, I'd pick out the highlights, the things that are moving. So I pick something from every sector. And so we can kind of go through it quickly to see what happened and what do we expect for the next day.
All right, check it out for yourselves. DanGRAMZA.com. Sean, anything else to add before we roll out of here, sir?
Yeah, one more thing. Dan, I'm not going to say a big adios to you today. I'm just going to say a big hasta luego, which means see you later. There's no adios.
That's great.
Yeah, I just wanted to
like that. Thanks, Sean. And thanks for having me, Mark. I really appreciate it. Sean, it's always great to be with you.
Always.
I really enjoy that. Thank you.
It was fun having you on there, Mr. Dan. Hopefully by the next time you come on, we'll score you that sweet URL. Speaking of sweet URLs, you know where to go to get all this data and a whole bunch more. CMEgroup.com/TWIFO, TWIFO, or /TWIO, TWIO. Both of those will get you to all of our This Week in Futures options goodness. You can run them all the time. You want to dive into that Class 3 milk, see what's going on there? Be our guest. You want to do it at 2 a.m. on a Sunday? Be our guest. It's always live, always calculating for you. CMEgroup.com/TWIFO or /TWIO. On behalf of everybody over there at CME and Sean, everybody over there in FTSE Russell land, and Mr. Dan, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for listening live. Remember, we got a big event coming up next week. Option Block 1000 on Monday. It's hard to say that with a straight face. 1,000 episodes. So we're going to have our big spectacular on Monday. We're not done this week either. We're coming back tomorrow for volatility views. A lot of vol to break down this week, so look forward to that one. And we're back again next Thursday, another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, Visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.